Euro dollar. So the euro remains confined to some choppy trade over the past several sessions, and a bullish reversal day on Wednesday could open the door for fresh upside back towards critical resistance on a short-term basis at 12.15, which coincides with the 61.8% fib retracement off of the July high to May high to July low move. If we do see a break above 112.15, this could open the door for a more correction up towards the 78.6 fib retracement, which comes in around the 113.25 area. Overall, the downtrend does remain intact, so any rallies are viewed as corrective, though the market could now break higher above 12.15 towards that 13.25 resistance. Inability to take out 12.15 will keep the more immediate pressure on the downside, with a break back below recent lows around 10.15 to expose that critical base at 108.10 from the 20th of July further down. Sterling dollar. So cable remains highly constructive, with the market now trying to establish above resistance at 56.90. After breaking above 56.90 the other day, the market will look to close above this level and open the door for fresh upside towards that 2015 peak at 159.30 further up. At this point, only back below 153.50 would ultimately take the pressure off the top side. Dollar yen. So dollar yen looks like it could be rolling over after stalling ahead of that 125.85 multi-year high a few sessions back, and this opens the door for deeper setbacks towards initial support at 123, which guards against more critical support at 121.30, that low from the 8th of July that we saw several days back. Euro Swiss. So Euro Swiss is in the process of a correction, though the broader recovery outlook remains intact, and any setbacks now should be very well supported into the 105.75 to 106.90 area. 106.90 is now initial support, which is actually some previous resistance turned support, and this level should support for a higher low in favor of a bullish resumption back above 109.62 and through 110 further up. Aussie dollar. So Aussie dollar has been comfortable consolidating off recent multi-year lows at 72.15, and there is the risk for a fresh upside beyond 74.40, which would extend the correction towards the 77 area. However, inability to take out 74.40 keeps the immediate pressure on the downside, with a break below 72.15 to expose psychological barriers at 70 further down. Dollar CAD. So dollar CAD put in a recent 11-year high at 132.15 and has since been in the process of some choppy trade, slowly correcting lower. At this point, there is the risk for additional corrective declines down towards key support at 128.60, which is that low that we saw back on the 29th of July. However, ultimately a higher low is sought out in favor of fresh upside beyond 132.15. Kiwi dollar. So Kiwi has been consolidating off its recent multi-year low at 64.70, and there is risk for additional corrective upside. If the market takes out key resistance at 67.40, this could open the door for a more significant correction towards the 70 area, though inability to do so will keep the more immediate pressure on the downside for a break below 64.70, which would expose psychological barriers at 60 further down. SPX 500. So the S&P 500 continues to show signs of topping off that record high that we saw in May, but the market needs to take out key elusive support in the form of the March low at 2040 to confirm this topping structure and accelerate declines. Gold. So gold is doing a really good job of recovering from its multi-year low below 1100, and if the market can establish back above the previous 2015 base at 1142, it will take the immediate pressure off the downside. However, inability to establish a daily close above 1142 will keep the pressure on the downside and open the door for a lower top and fresh weakness below the recent lows at 1073 and towards that critical psychological barrier at 1000 further down.